Hi traders, and welcome to the Technical Analysis Market Wrap on the 22nd of January. So we've had an interesting week with the inauguration in the US. The markets were a little bit, I guess a little bit flat, especially before that, and they had a public holiday early in the week as well. So it was an interesting start to the week, but it seems to have been grinding on towards the end. Some of the majors are starting to move again, and a couple of the key zones that we were talking about have been hit. So we'll jump into the charts and we'll have a look and see if we can identify any potential opportunities for the coming hours. So we'll start out here with the Aussie USD. You can see we've had a pretty good bounce this week. Look, it bounced off the 20 moving average here on the daily. You can see that very nice bounce off it. It's been doing it for basically since October of last year. So I guess it's no surprise that the uptrend has continued. That was a pretty good reload zone, but for mine, it does seem to be weakening out a little bit. I know we've talked about this 78 area being a very, very strong zone, and it seems to be struggling to get past it now. So as you can see, even though it's had a pretty good week, if we go to the smaller time frames, you can see, I'll go to we'll go to a 4 hour first. You can see that, these highs here are just struggling to be reached again. You can see here, it's failing to actually make it before it actually starts to pull back. It's trading above the moving averages on the 4 hour, but on the 1 hour though, you can see here that it all ended here with this little mini double top. You can see a little double top here. It's effectively played out and already fulfilled its destiny, but even this 1 hour sequence is struggling to get to those highs again. It's hovering around the neckline of what would have been a double top here, and you can see these rejections. Look at the big rejections on the last 3 or 4 1 hour candles. Okay, so it's struggling around here. We already know this. The MACD is definitely shifting on the 1 hour, and probably just as importantly, you can see it on the daily, which is the most important time frame that we really need to pay attention to. You can see that the MACD is definitely falling. Signal line is well and truly out, and price action is really doing exactly what the MACD is indicating it should. So, for mine, until it actually does prove that it's going to break these new highs, and when I say prove it, I mean do it, because that's what it has to do. It has to get a daily close above these levels. I'm not inclined to long this one, and I'll be looking for probably shorting opportunities. In the first instance, probably down to the 20 moving average, because it has been holding up really, really strongly, as you can see. So the best way to play that is to put just a horizontal line, around the level that you the 20s taken care of there. So then we go to the smaller time frame and you got something to aim for. Okay, so you can see here, if we get the sequence of lower highs and lower lows, so if we get a new low below the 77.40, we can scalp it down to this first zone here, which is roughly the 20 moving average on the daily chart. Now that's not likely to move very much in the coming hours, of course, because it's a daily chart, but we know that this could definitely happen in the space of the next trading day or early into next week. So I'd be looking for the shorts, wait for the change of trend, price to break down below the moving averages, and probably take this one shorter rather than longer, unless of course it starts to get a resurgence, makes a new high and breaks these highs here. And at that point, it might test the most recent highs, above the 78. But that's not as likely at the moment for mine, because I think that the resistance up here is very, very strong, and momentum seems to be definitely exiting this trade because the histograms are falling on several time frames. So the next one we'll have a look at is the US dollar CAD. Now this has been an interesting one. Look, it had a bit of a crack at breaking higher last week. We find ourselves in a similar position this week where it definitely tried to make a new low. In fact, yesterday it did make a new low, but what is interesting about it is it has completely reversed all of that push, and I think that's really, really important when we look at the price action on this one. We know this is a very, very important zone for it. And to highlight how important this zone is, I'll have to take it all the way out to a monthly chart. That's how important this zone is, and that's how far back it goes. You can see here it was extraordinary resistance for many, many months, way back in 2008, 2009. Again here, you can see resistance with support there. Price action was hovering around this level, so there's no question this is a very, very strong level of support for it, and it's going to take some serious breaking. So we're giving this a lot of leniency. That is, a dead set hammer at support on the daily, so there's no question about that. Whether there's going to be enough, push on the US dollar strength to get this up, well, that's to be decided, I guess. But we can go to the smaller time frames and look for the change of trends to actually get involved in this trade. I would be looking for longs from the smaller time frame. Only scalping, I'm not convinced this is going very long anytime soon. We need to see a good change of trend on a reasonable time frame first for that to happen. But in the first part, we're going to look for the smaller time frames. We need a series of higher highs and higher lows, which we've seemed to have got on the 15-minute. Smack bang into a 200 moving average on the 15, but that said, if that 15-minute closes above that level, we've got the lightning bolt effect that we want, and we've probably got enough reason to start to take this one long. We see we've also got the lightning bolt effect on the 1 hour, which is really, really good. Off this level of support, we know it's a very, very important level, so that is going to be a catalyst for basically either sending this very long from here, or if it does go short, it's going to go short a long way. So it's a very, very important zone at the moment. The smaller time frames are playing the game, giving us the changes of trend that we're looking for. And we just need to break above this 50, which is also the 200 and the 15. If we get a close above those, there's plenty of open sky all the way up to about 127 and even 127.50. So it's got some good legs in this one, and that's going to be determined a little bit by what happens in the dollar index as well. So the dollar index is the next one we'll have a look at. You can see here, we've also got the lightning bolt effect on that. Now, it's had a bit of a pullback here. You can see here that it's broken down below the 20 moving average and closed below it, which is not ideal, but MACD strength is still definitely with it. You can see the histogram is not very far away from crossing into above the zero line here. So I'm still going to give this the benefit of the doubt until it makes a series of lower highs and lower lows. I'm not convinced that this one's going to fail us. So really, what happens here is going to be a very strong indicator of what's going to happen in the US dollar CAD. So ideally, this is a pretty strong pattern. We've got the lightning bolt that we're looking for. At the moment, it's still in play. We wouldn't want this to close any lower than here, at this level here, which is around that sort of 89, 70 area, that's for sure. But if it does happen to pull back above the 20 moving average and hold above the 20, that's what we're really looking for. If we get the higher high and we get a close above this level here, which is the 90 area. If we get a daily close above that, it's going to be very, very good for all of the dollar-based pairs, especially the CAD, and it's going to spell a bit of a doom for the euro. So we'll look at that one in a second. But this for mine is still looking relatively strong. I don't like what's happened here. Make no mistake, I'm not impressed that candle has closed below the 20. But in saying that, the long still looks more attractive than the short. So hopefully we can get a bit of price action and push it above the 20 again, and the long will be in play on this one. Failing that, we need a lower high and lower low to test the lows again. But given that the dollar strength looks like it wants to come back to the market, we're hoping that's not going to be the case. The preferred trade here is definitely long. Now, of course, if this one does go long, the one that we're going to be looking for shorts on is the euro. Now, this one here, the euro, this is a 4-hour euro, and you can see that we've got a sequence of higher highs and higher lows. No worries about that, and MACD is also tracking higher. The only thing I can say about this one is it is about to smack bang into the 200 moving average on the 4-hour. Now, when we go to a daily, you can see that it's already got the series of lower highs and lower lows on a daily chart, and it's tested the 50, and now it's pushing up, and it's right into the 20, okay? So we know that the 20 has been very, very strong resistance and support for the euro right through. So the fact that this is right here and the dollar index is where it is, probably it leads me to believe that I'm probably looking more for shorts than I am looking for longs on the Euro USD, mainly because the other setups are a little bit better. But we only trade what we see, of course, and for this to happen, for this to short, we're going to need to see a series of lower highs and lower lows on a smaller time frame. So at the moment, it looks very strong, as you can see. So we need to be going to probably a 15-minute chart in the very, very first instance to look for that short. So as you can see, we're nowhere near a lower high and lower low sequence at the moment, but we know that we are at a pretty strong resistance on a couple of serious time frames. So what we want to happen here is we either need to break it above it and really start to jet set up to the 123 again, which will basically tell us what's going to happen with the dollar index anyway, or what we want to see, and the preferred trade again, is to actually break down and see a lower high, lower low sequence on a 15-minute chart. That's going to bode really well for the resistance holding on the daily, and if that happens, obviously we're going to see price somewhere back in this zone. Again, it's still got a little bit to go. I think it tested our first boundary of 120.50. It did that late last week and early this week, so that was great anyway. So any of the shorts that we took last week should have hit full profit, which is good. But again, this is probably the same game that we're playing here a little bit. It's about 150 pips away from the proper target of 120. I think that's where it could go. but we do need to see a reversal. We need to see that change of trend happen on a 15-minute, obviously at the start. And if it does that and breaks down and starts to trend down, I think the 120 is probably where it's headed. But in the first instance, you'd definitely be starting to lock in some sort of profit at 120.50 because we know this has been support in the past and it may well do it again. So you've got to trade this one with caution, but looking for a change of trend on a smaller time frame, or indeed, if the higher low sequences continue to push up, and then we'll be looking for these highs again on the probably 123 will be the level we'd be targeting at that point. This is just one of those ones where you got to set your alerts and let price action dictate which way it's going to go. The preferred is definitely to the short because it makes sense for a lot of the other trades that we're talking about. But if it does happen to break long, we've got to trade there as well. All right, we'll now take a look at the pound USD. Look, this is a 1 hour chart. You can see that we've obviously got a very good strong price action. It's been going up following the 20 all the way. When we take it out to a daily, you can see it's trying to break to, it's already broken to a new high on that candle there. It's trying to, basically continue here. It's one of those ones though that, it has closed above that high, no question about that. Now we're just probably waiting for a bit of a pullback. There is resistance here. You've got to go out a fair bit to see it. But it is there. But in saying that, I could easily see this get to the 140 without much trouble whatsoever. So what we're looking for in this particular pair, we need to go. We'll highlight this zone now. We can see that is a break above it, no question about that. We're going to go to a smaller time frame, and what you want to be seeing here is price continuation. We want to see a series of higher highs and higher lows continue. At the moment, it's going a little bit sideways, which is no surprise. We're in the middle of an Asian session, so this is probably not going to really kick off until London Open. But if it does happen to pull back to this zone, where the 136 sort of 80 area lies, that's the break. It can. You'd be looking for longs there if it gets there, but for mine, you probably just want to be scalping this one until it breaks higher again. So if you want to go long, you definitely want to wait for probably a 136.80. I wouldn't be just jumping in straight away. You want a reasonable pullback, and that reasonable pullback you can see on a 1 hour that would be fairly strong, but you can see how strong this roll reversal is here. It was very strong resistance here, and if it comes back to this level, you would probably fully expect that it will hold up and push up again, at least to test these highs again. So that'll be the trade. Or even push to new highs again. If it does break to and continue the high sequence up, there's probably still another 200 pips on the upside before it finds any real serious long-term resistance. So you can play this one both ways. You can scalp it down to the roll reversal level if you're inclined, which is it's not a lot of pips, but it's certainly scalpable. There's about 30 or 40 pips there that you can get. You need to go to a smaller time frame to see a sequence of lower high and lower lows. Wait for that to happen and aim for that 136.80. But failing that, if it doesn't get down there and starts to track higher again, a break of this new high here will continue this on, and you can be pushing up to probably the 138.50 to 139 pretty easy. It's looking very, very strong, the pound at the moment. All right, the last one we'll have a look at is the US 500. Now, this one, like I said, it's had a bit of a funny week because of the public holiday and the inauguration, but it's been very, very strong. You can see that the last 4 days have been pretty strong. We had a bit of a flat night last night, but it's sort of tracking here at effectively almost all-time highs. So it's one of those ones where I don't like trading all-time highs on indices until they actually really push past it and then come back and retest it. I've said this many times before, so I'm certainly not about to start changing that tack now. My preferred trade would be to short it back to the 20. You can see it's respected it for a long, long time. And when a market is uncertain, the 20 moving average, the exponential, is the first one it pulls back to because it's effectively a mean reversion. So the market uses that as a bit of a guide when it does struggle to find new ground and it's a little bit uncertain. So I'd be fully expecting that before any big long moves happen, we'd probably test this again. That level, if you count it forward a few more candles, you're probably looking at about that sort of 37.80 area. It could definitely get there. You need to go to the smaller time frames to look for that sequence of smaller, lower high and lower lows. If you get it on the 1 hour, I probably wouldn't. I don't really like trading the 15-minute on these ones, especially in an Asian session. But if we do start to see a little bit of weakness and we get a series of lower highs and lower lows on the 1 hour, it's definitely worth a trade down to that one, sort of 37.50, 37.80 area. You're going to find pretty good resistance support there, which was resistance previously. But most importantly, though, the 20 moving average on the daily is there, and that's probably where it is likely to head while it's still a little bit uncertain. At that point then we'll make a decision. I'm not sure it's going to happen really, really quickly. I think these moves now aren't that explosive. You can see that they're fairly well held. So we'll get a chance to look at that. I don't think you're going to be missing anything if you miss the first burst. It could be definitely along at the 20 at that point, but we'll assess the price action on the smaller time frames and see where it's at that point then. All right, everyone. So I hope everyone's had a really good week's trading, had reasonable opportunities, but yeah, the trends are still in play. Key levels are being hit. So set your alerts for the ones that we've talked about, and hopefully some of them will actually get moving in the direction that we need them to, so we can get into some good trades early next week. Have a great weekend, everyone. I look forward to seeing you all next week.